Hey everyone, Land Turner here from Pitt News Magazine. I've created a look at Tesla's price action from 2024 into 2025, and we see a pattern that looks identical to the Wyckoff accumulation and distribution model. Tesla, listed on the NASDAQ under the symbol TSLA, is one of the world's most recognizable and innovative companies. Founded by Elon Musk, its mission is to accelerate the world's transition to sustainable energy. While Tesla is best known for its electric vehicles, including the Model S, Model 3, Model X, and Model Y, it also develops and sells solar energy products and energy storage systems. Operating in the auto manufacturing, energy, and AI driven technology industries, Tesla stands at the intersection of multiple growth sectors. That makes it a stock that consistently garners both investor enthusiasm and market scrutiny. Just as a refresher, I want to highlight the Wyckoff accumulation and distribution model shown in the image illustrates the cyclical nature of market movements driven by institutional trading behavior. It begins with the accumulation phase, where smart money quietly builds positions while prices remain range bound. This is followed by a fast price move upward, signaling the start of a new bullish trend. The market then enters a pre-tension building phase, characterized by consolidation as early profits are taken and weaker hands are shaken out, before continuing the trend continuation. Conversely, during the distribution phase, institutions gradually offload positions, often masked by sideways movement. A sharp move downward follows, and after another period of consolidation and tension building, the bearish trend continuation resumes. This cyclical pattern helps traders anticipate major turning points and align with institutional flow. When we overlay the Wyckoff accumulation and distribution cycle onto the Tesla, ticker symbol TSLA daily chart, we see a near textbook execution of Wyckoff's market phases unfolding in real time. The pattern match is striking, from the initial accumulation to the fast markup, through distribution, markdown, and a new cycle of accumulation. Here's the technical breakdown. Phase 1, accumulation phase. Far left in the $150 to $200 range, Tesla began with a clear sideways consolidation range after a previous downtrend, consistent with Wyckoff's Phase A, the start of accumulation. Parabolic SAR dots alternated tightly above and below, signaling range-bound behavior and a lack of dominant trend. Buy signals began appearing near support levels, indicative of smart money accumulation. Phase 2, fast price move, markup phase. Tesla broke out from the accumulation base and began a strong uptrend, consistent with Wyckoff's phase C to D. The parabolic SAR flipped below the price and trailed well beneath the trend, confirming strong momentum. The price advanced quickly to around $500, validating Wyckoff's fast price move following accumulation. Phase 3, distribution phase, near $500 to $550. After peaking, Tesla entered another sideways range with alternating buy and sell signals and shrinking candle body size, classic signs of distribution. The SAR alternated more frequently, indicating stalling momentum. This aligns with Phase E of Wyckoff, where institutional players distribute shares to the public. Phase 4, markdown, bearish trend. Following distribution, Tesla broke down and initiated a steep sell-off, consistent with Wyckoff's markdown phase. The SAR flipped to the upside and trailed the entire downtrend. Red Heikin-Ashi candles persisted, confirming sustained bearish momentum. The stock dropped from around $500 to below $250. Phase 5, secondary accumulation. After finding a bottom near $220, TSLA entered a new accumulation range. Price action turned sideways again, and the SAR began flipping frequently, echoing Wyckoff's restart of the cycle. The current price, $319.91, sits within a tightening triangle, possibly completing the building pre-tension phase, setting up for another fast price move. Conclusion: Wyckoff pattern alignment. This Tesla chart nearly mirrors the Wyckoff cycle overlay. Every major leg, from initial accumulation to markup, distribution, markdown, and reaccumulation, is clearly visible. TSLA appears to be in the late stages of reaccumulation, with a potential breakout looming. Watch for confirmation of a breakout above $340 to signal entry into the next markup leg. Now let's talk about the major institutional players and whether they're quietly accumulating Tesla. Vanguard. They added 3.6 million shares in the fourth quarter of 2024, bringing their total to 242 million shares, or about 7.5% of Tesla. Most of their buying was passive, through index funds like their total stock market ETF. BlackRock. They bought 7.4 million shares in the fourth quarter of 2024 and another 3.5 million in the first quarter of 2025. That brings their total to 202 million shares, or around 6.3%. Again, most of that came through iShares S&P 500 ETFs, mostly passive. State Street, their holdings are around 3.1%, and they likely added a few million shares as well, tied to their index funds. Other institutions, Geode Capital, which owns 1.85%, and Capital World Investors with 1.34%, also added a few million shares combined. Their strategies are also mostly passive. But now let's look at some active buyers, the ones making strategic bets. ARK Invest. They bought 143,190 shares, about $44 million, on July 24, 2025, across their ARKK, ARKQ, and ARKW ETFs. This is a strong signal of bullish sentiment on Tesla's AI and self-driving potential. Bridgewater Associates. They picked up 153,000 shares during Tesla's first quarter dip. Goldman Sachs. They bought 1 million shares, likely during periods of price weakness. These are smaller buys compared to the index giants, but the timing and intent behind them matter. These firms are buying when prices are low and sentiment is cautious, exactly what Wyckoff would call smart money behavior. Tesla's current setup shows promise, but like always, volatility is part of the deal. A 69% gain in 2024 tells us the stock can move fast in either direction, so keep your eyes on the volume and that $330 level. If it cracks, the groundwork laid by months of accumulation might finally pay off, and you'll be watching the start of the next big Tesla move. Now, just to be clear, I'm not here to tell you what to do. My job is to show you what I see in the charts, share the data, and walk you through how the big players might be moving. That said, I'll tell you what I'm doing. I've been picking up shares of 3 tickers, TSLY, TSYY, and of course TSLA, but that's just me. You do you. I always suggest you dig into your own research, do your own analysis, and make the decisions that make the most sense for your portfolio and your risk tolerance. If you enjoyed this breakdown and want more insights like this, delivered straight to you every month, make sure to check out pitnews.com and sign up for Pit News Magazine. It's just $39.95 a year, and you'll get exclusive reports, technical analysis, and market commentary that cuts through the noise. Want to take it for a test drive first? No problem. Get your first 2 months for just $1 and see if Pit News is the right fit for your trading journey. Head over to pitnews.com and start your trial today. We'll see you inside.